As a small business owner just starting out, collecting harmonized sales tax is not necessarily a requirement, but it can be beneficial. And today I'm going to share with you what HST is and why you should consider registering to collect it. My name is Winnie Standish, and I have built my successful businesses utilizing hard work and dedication. A quick disclaimer to start off today's episode. I am not an accountant, and you should always talk to your own accountant who is the expert in your area and region and most up to date on recent rules. What is HST? HST stands for Harmonized Sales Tax and is a consumption tax that's applicable on your purchase in Canada. There used to be a province sales tax and a government sales tax. And now in most provinces, they've combined it into one, which is called HST, which stands for Harmonized Sales Tax. Do I need to collect HST? You only need to collect HST if you have more than $30,000 in earnings in 4 consecutive quarters. This means that you cannot add HST to any invoices that you send to your customers unless you are voluntarily registered for HST. If you'd like to voluntarily register for HST, I'm going to leave a link below in the show notes so that you can jump onto the website and register yourself. And it's important to note that once you cross that 30,000 threshold in 4 consecutive quarters, it is no longer voluntary and it is absolutely law that you must collect and submit your HST. So why should I collect HST if I don't have to? That's a very good question. The main reason that you may want to consider registering to be an HST collector is that you can claim something called ITCs, which stands for Input Tax Credits. This will allow you to recover HST on purchases you have made or your operating expenses. For example, let's imagine that you just bought some paper for your business. And this business that you bought it from, perhaps it was Staples, they charged you HST. When you are an ITC collector, you can now claim the HST that Staples just charged you against the services and products that you have sold to someone else. Now you might stop me here and say, Winnie, this sounds a little complicated. Can you give me an example? Absolutely. Let's dive into it. Let's pretend that you're a chiropractor and you are charging a service to a client for $100. In Ontario, HST is 13%, so that will mean that you are now charging a total bill to this customer for $113. Now let's pretend that a few days later, you go and purchase a supply for $100 for your business. Or maybe you had a bill coming in for electricity that also came to the amount of $100. And on this bill, you were charged the HST, which again is 13%, which means that you just paid $13 in HST. Now at reporting time comes the fun part. Because you purchased a supply for $100 and was charged $13 in HST, and because you sold a service to a client, that also meant that you reported $13 in HST that you had to keep for the government, you can now take the amount that you charged and the amount that you paid and deduct it. Meaning that the $13 minus the $13 equals 0, so you actually have nothing to report to the government, meaning that you just pocketed $13 that you wouldn't have if you weren't registered to collect HST. If you're currently enjoying this episode, I would love it if you could like, comment, and subscribe for more great episodes. And leave me a comment below and let me know if your business is currently registered to collect HST. So you might ask, Winnie, this sounds wonderful. Why wouldn't I want to collect HST? And that's also a great question. So let's talk about that. The number one reason that you may not want to collect HST is because it is extremely time-consuming work. Now, it is good practice to get into from the beginning, but it can also be overwhelming. When you are a new business, you want to focus on growing your business and getting stuck in little tasks such as accounting and keeping track of all of these receipts and also finding the time to report it all to the government can be quite overwhelming. What I recommend is that you instead set yourself up for HST when you have made your first sale and when you can afford to outsource this task to someone else. An example of someone who can do this task for you would be a bookkeeper, but it's also important that you keep your own time in mind and that you manage it properly. I've made a great video on how to manage your time that I invite you to check out. And the second reason that you may consider not charging HST is because it could give you a competitive advantage by not being forced to charge your customers HST. Because who wouldn't love to save 13% on their final bill? There are of course many other ways that you can please your customers. One is just by offering great customer service. I've made a great video on this subject that I invite you to check out. And just remember again that it is only voluntary not to collect HST until you hit that threshold of $30,000 in earnings in 4 consecutive quarters. And the final note for today's episode is an important one. You must register to be an HST collector before you can claim any ITCs. This means that if you make a sale 2 years from today, you can still go back and claim ITCs from today as long as you had previously registered to be an HST collector. There's a lot to know when it comes to HST, and you may have a lot more questions. Again, talk to your accountant, but I'll also list in the show notes below where you can find more information on this subject. My name is Winnie Standish, and I hope you have enjoyed today's episode. Don't forget to like, subscribe, and comment below and let me know if your company is registered to collect HST. Have a positive day.